Good evening, ladies and gentlemen. What is happening? Funny story with Bitcoin today, huh? Now we're going to be talking about that later on in the live stream. We had the speakers from the FOMC talking today, not really giving us what we want to hear, but more importantly, what Powell really should have said. Waller and Williams spitting that fire. More interest rate hikes that need to be established. Earnings recession. Big companies declaring losses, or not so much losses, but not hitting their estimates. Not many shareholders are happy. Is the bull run going to fall through? This is the point where I turn to you guys and I say to you, pay yourselves. Nothing wrong in taking money off the table. That's the truth. Because there will be a bullish market, there will be a bearish market, or what I like to call markups and markdown phases. Now, in tonight's live, we're going to be breaking down a couple of concepts that we spoke about last night. Seems like that little trick kind of worked out in our favor. Now, I'm not here to be like, look, I told you so. No, far from it. Because I said 8K and it hasn't happened yet. But that's another story. I might wind up a few people. I mean well, believe me, I mean well. I'm here to give you the news. I'm here to let you know what's going on. You got DCG cutting their grayscale investments because they need to satisfy the creditors. What's going on with my speech tonight, ladies and gentlemen? Grayscale makes a lot of money purely on transactions of managing a big company like DCG's assets. And that is going beyond discounted value. We go over to the Glassnode very shortly, and we're going to be talking about where are the net unrealized profit and losses for the Bitcoin holders and where's their mindset at. So, ladies and gentlemen, let's get to the charts, man. Enough of this chat. Let's have a look at what's been going on in the markets today. Well, firstly, Bitcoin has taken that little bit of a tumble going into last night's live stream, where we were talking about this bad boy right here. Now, this was on the 6th of September. So we'll just quickly take a look at that, go into the hour time frame, and we'll take a little trip to Mr. 6th of September and understand what had happened in that region. So here we go. There it is. So part of what we were talking about last night, if you are new passing through, we were trying to get you to understand this little strategy right here, this play of the green vector candle that moves up and the red vector candle that follows usually leads to what looks like a drop in price. Because this structure right here is a stop run to the upside to trap traders in their investments to the upside, and Mr. Market Maker is eating that liquidity right there, hitting all those liquidation points. Now we go over to the actual chart itself, and you can see that Bitcoin followed through with that. We go into the actual, I think it is here we go, right there. So the same story came through, all right? Big green vector candle followed by a red vector candle, but they did come up towards the psychological range. Now, if you are new to the channel, psychological range, which is a psychological high and the psychological low, is where the first high and the first low is established at the start of a new crypto trading week. And that usually is on Saturday at about 9 o'clock in the evening GMT. Green jumpers in it, bro. Green jumpers it is. I don't know how many of you know about the green jumper story when we're trying to explain the idea of why price goes up and price goes down. I might tell you that very shortly. You might need to remind me, because usually when I speak on this live stream, I'll tell you, yo, guys, tell me what you're saying in the comments, and then completely forget about what I asked you. Now, look, this is the story right now, guys, okay? Stocks get hit with hawkish Fed chorus, grows louder. Markets wrap up. On the street, they're talking about bets of 6% on the benchmark. What does that mean? They're going to increase interest rates to 6%, or that's what traders believe, because there are traders out there that bet on where the interest rates are going to end up. And that's because of the hawkish comments today by Waller and Williams, all right? We've also got this bad boy right here. Credit Suisse warns that debt ceiling impasse will likely prove stressful for the markets. All right, cool. You got this guy right here. U.S. Senate Majority Leader Chuck Schumer Democrat of New York, pointing to a very interesting screen, well, a document. Look at this. Interest rates are going to go skyward. Stock market's going to crater. It's going to be a complete bedlam. All right, cool, bro. Thank you very much. And you say, I'm the one that gives you guys the FUD. I'm just telling you what these brothers are saying. Tesla could actually end up at $1,500 a share by the year 2030. I want to know what's going on now with Tesla rather than what it's going to do in the year 2030. Did you know, guys, actually, in the UK, they passed a law that says you're not allowed to bring salmon from anywhere, or illegal salmon. All right, I don't get. I'm guessing it's the fish, but apparently it's illegal for you to bring that from overseas. Never knew that. Anyways, going back into it all, this is what I was talking about. DCG sells shares with Grayscale crypto trusts in push to raise funds. Now that's not FUD. All right, they're just releasing capital that they've got tied up with Grayscale, and Grayscale's Bitcoin trust is sinking in value, which takes me over to this bad boy right here. This is the Glassnode. Now, the Glassnode is kind of good at telling you where we are overall with Bitcoin holders. You can see at the top side right here, when Bitcoin went to around $17,000 back in the day, traders or holders of Bitcoin were at a euphoric state. And usually it gives us the idea that if it's at a euphoric state, it's going to come down because everyone is so optimistic about Bitcoin, but they're also greedy. What a perfect time to smack price back down again. So where are we right now? Bro, I need to sort myself out. Here we go. Right now, we have got a little bit of an edge upwards towards the around about the 22,900 zone. And the orange line right here, guys, if I just zoom in closely for you, the orange line suggests that investors are somewhat hopeful. So those guys who are in net unrealized profit and losses with Bitcoin, right now, their mindset psychologically suggests that they are hopeful about Bitcoin. Then we go over to Bitcoin's price and we have a look at what is likely to happen. Well, look, Bitcoin, quite frankly, hasn't gone anywhere. How many times have you heard me say that bad boy? And this is something that I want to try and stress to you. An investor holder should only have an interest in the monthly time frame or the weekly time frame. That is my honest opinion. Anything that happens in the charts on the hourly and the 4 hourly is too much noise, if I'm honest with you, if you are a holder and investor of Bitcoin. Bitcoin would have to move up 10% to get your attention, if I'm quite frank with you. That's my honest opinion. But if you're a day trader, it's a different story. Every minute counts. You're looking for one zone getting rejected against another. And this is what I'm talking about right here. Look, you can see Bitcoin, although it's doing a great job of holding inside of this zone right here, we've rejected this area up here. So the best thing that I usually say to the majority of the patrons in the channel when we're doing the breakdown of the markets every single morning, I say to them, what is Bitcoin doing more of and not following through with it? So you're looking at this chart saying to yourself, well, what is Bitcoin doing? Is it moving up more or is it coming down more? What's it doing more of? Okay. So when you do come to the charts, ask that question because that's going to help you understand what they're likely to do, because the game's all about probabilities, ladies and gentlemen. That's the truth. You're never going to know exactly where it's going to go. All right. Last night, we made the assumption that that simple strategy would likely play out. It may not have played out, but you would have seen an example of what usually happens when that structure comes to play, when that sort of price action comes in the charts. It happened to play out. Cool. Now what? We're back into the same zone. And that's the brutal truth of cryptocurrency trading. Comes down and it goes straight back into the range. Now, a lot of conversations are being had about this golden cross. Which golden cross are you referring to, Tino? I'm talking to this beautiful golden cross that I don't... Anyways, the golden cross of the 200 and the 50 EMA. Short term. Looks kind of promising. But it hasn't really crossed over just yet. Then we go over to the weekly time frame and we got an even worse cross happening, which is that bad boy death cross, which is the 50 crossing over the 200 EMA on the weekly time frame. Bitcoin has yet to take out that critical 25 zone. All of you, put in the charts an alert at 25,236, okay? When you look at that area and then you look at price, you're then going to be thinking, well, is it going towards it or not? And as each day passes, you're going to get a clearer look as to whether or not the momentum of this big moving average. Now, if you are new to the channel and you haven't downloaded the hybrid system indicators, check out the Traders Reality website. It's free of charge. There's steps on there that will guide you through how to install it. And I'm going to do a remake of the MT4 video walkthrough for anyone that may be interested in how to get indicators installed onto MT4 MetaTrader. Anyways, so looking at the weekly chart, I mean, the problem that I've got with the weekly is it hasn't actually got any vectors to push away from, okay? You notice the volume down here is not as much as what the volume is over here, but we've had this one sell-off in this week that has caused a bit of a problem. That was last week's sell-off. And then we've got this current weekly candle, which seems to be a bit of a problem for us, trading towards last week's lows, trying its hardest to stay above it. Now, going into the 12-hour chart itself, Bitcoin is now getting closer towards this 50 EMA. That's very important for us. Why? Because this is where we would anticipate a bounce from this zone if they can hold this area. The 800 EMA would be a nice sweet spot for Bitcoin to go to, and that would break above this key zone right here, that 25,214 zone. But when we said earlier on about the stocks going into an earnings recession, all right, as good old Morgan Stanley says it, investors aren't in a bull market yet, and stocks will be ravaged by earnings season. Well, look, earnings season tonight, we have Disney declaring its earnings. If knowledge serves me correctly, that should be now, okay? Now, if we go over to Disney, we have a look at what the story is. It's got a market cap of $203 billion. And on average, every day, it trades around 12.5 million shares a day. And they kind of moved up on volume today, which is kind of good, actually, when we consider it. But if we just go over to the NASDAQ and the S&P, that will put things into perspective for us. So here we go. NASDAQ on the futures markets. Here we go. Resistance at this key 800 EMA for the NASDAQ. All right. And if earnings season is going to be a problem, then we're going to start seeing NASDAQ pulling back in towards these vector candle regions right here, guys. So just be mindful of NASDAQ. S&P at the same token. Resistance coming back into that little area right here, guys. This trend line is the one that I taxed off Twitter because I want to know where investors' heads are at and where traders' minds are at and where their commitment is. You see, market makers are going to do things differently. They're going to place their positions where your stops are. That's the truth. That's why if you ever go into a trade and you put your stop loss, it gets triggered and then it goes in your favor. It's because you're putting your stops where 95% of traders are placing them. Usually when you want to put a stop in place, you want to see where the structure is in the market where traders had got encouraged to step in, all right? You place it below that structure. Now, wherever your risk management allows you, how much can you absorb is a different story. Let me explain to you. So here's an example. Let's go on the 4-hour time frame. Let's hypothetically assume that you were to run a short on NASDAQ, okay? Would you place your stop, an S&P, would you place your stop inside this area here at 4163? Would you place it up here at 4188? Would you place it all the way up here at 4209? This is where the hybrid system can help you. If you placed it up here in this red vector candle and you want to exercise correct, or should I say decent risk management, there is a great chance that you will get stopped out, okay? Because that in principle is a red vector zone where investors were running to get their shorts covered. To get their sells covered because they were caught out on the wrong side of the move and the shorts covering as well, okay? So that wouldn't be a good place because there's a good chance it's going to get hit. We look up here and we say to ourselves, maybe at 4,203, if I run a short, how likely could they come up towards that point? Well, if we go into the calendar and have a look at what's coming out this week, we had Waller and Williams speaking, happy days. Tomorrow morning, we got monetary policy report hearings for the pound itself. And the pound itself, I mean, the UK is indecisive as to whether or not they send fighter jets over for the Ukraine, the situation that's happening out there. I mean, bruv, like, what is going on? Anyways, besides that, unemployment rate is coming out tomorrow. Unemployment claims are coming out tomorrow. I'm going to reiterate it again, which is exactly in line with this bad boy right here on further rate hikes. They're drip feeding the information. If tomorrow's unemployment claims comes out and suggests anything less than 191,000, the markets, in my opinion, will likely go down even further because, as they said it, they are data-driven. Where is it? Where did they say that we are going on the data-driven aspect of the marketplace? I had it highlighted, man. Where is this bad boy? I can't believe it. It's not here. Where is my data? I don't believe it. Anyways, it said there that it's data-driven. And that's the problem with the markets right now. You see, when Powell was speaking yesterday, they were giving, the gentleman was interviewing him, and he was trying to get him to say that the markets were wrong. All right? But Powell wasn't saying that the markets were right or wrong. He just kept on going back to the idea that, yes, you know, we've got to rely on the data. We've got a bit of a situation. We do expect interest rates to remain high. And now all of a sudden, investors and traders are projecting for a 6% terminal rate. Before it was 5, then 5.2, now it's at 6. Is this goalpost going to get moved continuously? Have that in the back of your mind when you're looking at your portfolios or you're trying to make a decision on something. You see, the worst thing about it is we go over to here and you can see that Berkshire Hathaway right here, stock is at a point where Warren Buffett usually buys. So if people see that, they're probably going to be thinking, I'm going to go and do what Warren does. Now, you might not want to be buying Berkshire Hathaway because Berkshire Hathaway itself is kind of an expensive asset. I mean, this bad boy doesn't have that much trading volume, but it's priced. No, wrong one. Berkshire Hathaway, there we go. BRKA, this bad boy is $467,000 a share. So you can see it's effectively Warren Buffett's own stock. And he just decides whether he wants to trade it or not. I mean, how many funds own? Funds own 12% of this bad boy. And this is where it's at, okay? The number of funds, I don't think you can see it, but it says from March 22, funds were at 252. That means fund managers involved in this stock, buying it, all right? And then going into September, it went up to 263. And then December 22, it went to 268. So there's been an increase in the funds invested in Warren's good old little stock, okay? Now, that's an expensive stock, and it's got $685 billion market cap, so it kind of puts things into perspective. But going back into what I said about the stops, if you're going to place a stop, ladies and gentlemen, you've got to place it beyond the structure where people got trapped. You see, this is the point I'm talking about. That's where they got trapped. Big candlestick to the upside, yeah? Green candle, red candle formation, rip to the downside. Cool. Now, you place it in above these zones. Why? Because let's make the assumption. This is a little strategy. Let's say you opened a short from here at 4132. All right? Now, put aside the maths about, oh, that's a 5% risk factor, Tina. I can't do that. It's all based on your preference of risk. I'm trying to give you the logic on how you can approach avoiding getting stopped out. Okay? Look, you place your entry to go short from this zone here. All right? You place your stop up here. So 4,233. Take a Fibonacci towards your entry, so 50% of that range. All right? Patrons know what I'm talking about. Take 50% of that range. Now, if price continues up towards this point and it's stalling in this zone, but you've got a moving average in support of a move higher, you've got a vector candle up here, you, in principle, could change direction and run along. Because if you hold out to see if your stop will get hit, you might not like it. You might think, oh, I can't handle this pain anymore. I'm going to close it. And then bang, it rolls over from that point. Well, you might as well take advantage if the momentum is present to run it up towards that point. And then the distance from here towards that 50% zone, you'd be, in essence, alleviating the loss by earning some of it back by changing direction. It is a little bit of a tricky strategy, and you've got to have balls. Bulls, bears, that's what I'm saying. You've got to have balls. Bull market. The bull market is not yet. Anyways, ladies and gentlemen, that's completely lost my trail of thought, man. So look, the takeaway for you is this, all right? Traders are betting on the idea of a 6% terminal rate. What traders say is irrelevant. It's what the Fed's going to say, all right? Tomorrow, unemployment claims will be due out. Now, if anything below 191,000, that suggests that people are still not worried about the economy and they've got work, or they're working 3 jobs at once. Irrelevant. The information suggests that less people are claiming benefit, all right? Cool. Going into Friday, we do have the preliminary consumer sentiment, and that is usually a good indication of where everything is, and we have the inflation expectations. So I'm just alarming your minds, getting you ready for what other information is due out this week. So if you are running certain positions and you're waiting to see where you're going to close them, there is volatility due to hit the marketplace, all right? Remember, the market is not the economy. And we should never fight the Fed. And that is really what's going on across the board. Ladies and gentlemen, mad love and respect. If you are new to the channel, be sure to like and subscribe. I want to keep it short and sweet, and I'll be checking in with you beautiful people tomorrow. Take care of yourselves, gang. Peace.